Hi, I'm Garth McKenzie from traderscorner.co.za. And this week, I'm taking a look at some of the big cap growth stocks that are due to report earnings during the next month. At the end of June, obviously, we end the second quarter, and then earnings season for that second quarter will begin in July. And three or four of the stocks that I want to focus on today are all growth stocks, which have all got reasonably interesting technical setups, and stocks that typically do move higher into their results, into their earnings. So let's get into it and have a look at each of these one by one. The first is Apple, and I'm showing a daily chart of Apple over here. As you can see, the stock has consolidated mostly sideways with a fair amount of volatility over the course of this year, but hasn't really made any headway in the year to date so far. But as you can see, there's a series of higher lows that are evident there, and there's overhead resistance at $135 a share, and that it looks as if it is likely to break to the upside fairly soon. Apple's likely to, or it's due to release earnings on the 29th of July, so a month from now. But as I said, typically what we do see with these growth stocks and these ones that I'm highlighting here today is that they tend to rally into their results, generally speaking. So what I'm looking for here is the possibility that Apple breaks above that $135 resistance area and then moves on up and possibly goes to that prior high at $144 and quite feasibly beyond that if it can break out above $135 per share. Then let's move on to the next one, which is Tesla. Always a controversial stock, a stock that some people love to short because they believe it's overvalued, but I'm always of the view that you should trade what you see. And what I see in this chart is actually a setup that's looking reasonably bullish in the near term. The price recently broke up above $625, which was a bullish break, and that saw it move quite aggressively to the upside. It's now broken above $650 as well, which is a break above the upper end of a descending triangle pattern. So that's a fairly bullish break, and it opens the potential for the price to move higher, back up to about $775 if it can sustain this break above $650. Tesla is due to report earnings on the 21st of July, so that's about 3.5 weeks from now. So keep an eye on that, and I think as long as it's above that $625 resistance, or what was resistance, it's now support. As long as it's above $625, then I think the bias here is probably still for the price to move higher into earnings. Then let's take a look at Amazon.com. This is now a weekly chart that I'm looking at here, so a bigger picture view than what I was looking at with the previous two charts. Here we've got Amazon over about an 18-month period, and the reason I've zoomed out on that and the reason I'm showing a weekly chart here is just to show you the range that's been intact there for pretty much the last year. It's been range bound between $3,000 and $3,500, and it's tracked up and down sideways within that range during that time. But Amazon is due to release earnings on the 29th of July. And if the price is able to break convincingly above $3,500, then that would be a very bullish break, and you'd project the height of that range upwards. So it would give you a measured target of about $4,000 for Amazon. So certainly watch out for a break above $3,500 there as the price, as the stock approaches its earnings at the end of July. And then the last one I'm taking a look at here is Netflix, and also a weekly chart we're looking at with Netflix. And you're seeing a very similar pattern here to what we saw on Amazon. The stock has been tracking sideways in a broad range for the last year. The range here is $480 to $570. It's recently turned up off the bottom of that range, and it looks as if it's now heading up towards the upper end of the range. So as we stand right now, it's bang in the middle of that range, but to me it looks as if it's heading up towards $570. Netflix due to release earnings on the 20th of July, so about 3 weeks from now. So keep an eye on that one. And again, if this price were able to break out through the top end of that range, above $570, then that would give you quite a big upside projection. You take the height of that range, which is $90, and project it up from $570. So it would give you a measured target from a technical perspective of about $660 per share. That's all I've got for you this week. Keep an eye on these shares as we go into earnings season in July. I'll be back again next week with some more market analysis for you.